What's up guys, Houston here. And for those of you just finding my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. And for those of you that's been following me and supporting me, salute. And for my faithful patrons, double salute. Now, today's video, we're actually going to be talking about what's just happened. If you're a person that uses buy now, pay later, then this video is really going to help you because it's going to show you how to increase your credit score with the buy now pay later loans. As a matter of fact, as you can see in the headlines, Equifax is actually going to be reporting these type of trade lines on your credit score starting in 2022. Now that's a good thing, and the reason it's a good thing because it's supposed to increase your credit score another 13 points. All right, now I'm gonna be adding to this. So guys, as I was saying, with Equifax starting to get into the game to try to help you build your credit with buy now pay later, there's other ways to help increase your credit score more than 13 points. I'm talking about at least 100 points, in which I'm going to show you. Now, one of the things that I do want you all to understand, these companies that I'm going to be showing you, these buy now pay later companies, here's the thing about it. If you an individual that uh misses a payment or whatever, what they do is they freeze your account. Okay, and then if you actually don't pay it, then they'll send it to a collection company, and so that collection company will report it as a negative on your report. However, the company, like the companies that I'm gonna be showing you, they're not going to report a negative trade line on your credit. Okay, so if you miss a payment, they may charge you a fee and then give you a chance to catch up or whatever, but they will not report it as a missed payment. Like if you had a credit card payment, if you missed a payment, they report it. No, not with the buy now pay later. And I think that's kind of cool, but at the same time, if you just get the product and don't pay it at all, then they'll send it to a collection and that will report. But nonetheless, let's look at some ways on how to boost up the credit score. Now, here's why you want to use these type of services to help boost up the credit score. Like you have Grow Credit, you have Perch. If you have subscriptions and stuff like Netflix, Hulu, they're reported to the credit bureaus. But also remember, guys, if you have a car insurance, if you have say that you have a gym membership, those type of things are subscriptions as well that can get reported to the credit bureau. Also your utilities, so just keep that in mind. So things that you may not think that can help you build up your credit, because of these new fintech companies, they definitely can help you increase your credit score up 100 points or more. Now, you can use pledge loans and credit builder loans to help increase the credit score. Also with Experian Boost. Now, for those of you that may have tried Experian Boost, put a comment. Let me know how many points did it actually increase your credit score. Okay, because I know some people don't like it because they said don't give them enough points or whatever. I think their average points is about 13, similar to what Equifax is talking about with the buy now pay later. When they report it's an average about 13 points. Now some people are like, well, that's not a lot or whatever, but adding these other trade lines, these other primary trade lines at that, this would definitely help you boost up your credit score a lot. Now, you can remove inquiries. That's going to help you increase your credit score. Also, adding authorized users. Now, the reason that I'm telling you about these here accounts, especially authorized users, is because with the FICO 9, authorized users actually work to help boost up the credit score. So when you're looking at lenders and stuff, you may want to be looking for lenders that actually use FICO 9 instead of FICO 8. Most of your banks like Bank of America, Chase, Citibank, they don't use FICO 9. Okay, they use FICO 8. So just keep that in mind. And if you don't know really want to know the difference between the two, then check out the link below this video and pull your FICO score so you can actually see. All right. Now I know a lot of people use Credit Karma, but Credit Karma uses a Vantage score. Okay. So when they're trying to get you qualified and stuff, they're using a Vantage score, and so that Vantage score seems like it's a 700, where that Vantage score can be probably about a 640 or worse. So you have to be careful with when people say, "Oh, the Vantage score," because the Vantage score isn't the best scoring system to leverage off of to build credit. Okay, now um, you have apps. You have the extra debit card app, and you have One Financial. Downloading those apps, connecting your banking information, so every time you use your debit card, at the end of the month they'll tally up all your transactions and they'll report it to the credit bureau. Now with the extra debit card app, they report to Equifax and they report to Experian. Then you have companies like Boom Pay and Rental Karma. These are companies that actually report rent payments. Now, why is that so important? Well, you have companies like Perch as well. Perch reports up to 6 months of rent payment. Boom Pay states that they report up to 24 months of payments. Rental Karma, I think they do at least 12 months. Now, the thing about it, you want this here on your credit file because when you trying to get like larger lines of credit, you want to make sure that they understand that you do have a debt, okay, a rental debt or whatever. I understand about the DTI having a too large of a debt to income ratio, but say that you trying to apply for a credit card and say that you said that, oh, I'm making 150,000, but you don't have no rent or no mortgage on your credit file. You see how it just doesn't work. So that's the reason that I tell you guys, you really have to pay attention in terms of the numbers that you put on your credit card application and the information that's on your credit card application, okay? Now let's talk about some of these companies. You have companies like Affirm. Um, they allow up to, their limits go up to 17,500. Now they do a soft pull. They offer you 3, 6, 12 months to make payments to pay off of whatever the purchase it is. Now a company that's offering you 17,500 to make a purchase, this is the type of leverage an entrepreneur needs, especially if you're trying to start your own business, sell products and stuff online, because again, it's not hurting your personal credit. And number two, you can split the payments up over 12 months. So that's the reason, like leveraging companies like this that's not actually going to hurt your credit is definitely a game changer for a lot of people, because now where you was thinking, I want to start a business, well now you have these companies that say, hey, what type of business, so if you're in the product based business, then using these type of companies to see if these type of companies are offering the products you want to sell and leverage them that way, even though you don't have the money. Now sometimes they may check like your um verify your income or something like that. But for the most part, you looking at these type of companies, you looking to make a purchase. Say that you wanted to get into like online sales. So being on Amazon or eBay buying mystery boxes and stuff when you don't have the money, and then taking those products and reselling them to actually generate money and turn it into a business when you didn't have the money at all. That's the type of leverage I'm talking about. Now you have another company, Sizzle. They go from 500 up to 750, and again, it's a soft pull on the credit. Um, if you miss a payment, these companies again, they'll just freeze the account. Okay, so it's not going to affect the credit unless you just don't pay the account off. And then when you don't pay the account off, they send it to collections, as I stated earlier. Okay, so if you need to reschedule a payment with them, the first rescheduled, they don't charge you a fee for it. All right. Then you have Afterpay. Afterpay, they start at 500, and it's a soft pull. Um, they give you 4 equal payments, but you have to make your first payment. So say you had $100 purchase, you pay that first 2,500, and then that other 75 is split up over time. Okay, so these companies are really trying. It's a layaway type of thing, but you get the products right away. But at the same time, if you know how to actually leverage this strategy, you would actually make money off of these companies. Now you have Split It. Split It is interesting because whatever's on your debit card or credit card, then that's the limit they give you. So if you sign up with a $10,000 credit card limit, right? And you out and you say that you make a purchase. Say that you at an auto auction or something like that, and you buy a car for like $5,000. Then you choose, well, I want to pay that $5,000 over 24 months because they're not charging you any interest on it. That's the crazy part about it. You got an interest-free loan and you just bought a vehicle. That's better than going to a credit union, right? And then you just splitting those payments over a monthly term. This is how you actually leverage. So for those of you that's looking to get into Toro and stuff like that, this is how you actually leverage, because that $5,000, it's a it's not looked at as a purchase. It's a pending purchase. And that's how they show it, as a pending purchase. So you didn't actually use that credit card. You used their money, but it's a pending purchase. And then whenever the payments that you make, you're making it back to them. So it won't affect the credit card. Okay? Then you have a PayPal, the PayPal Pay in 4. Now their limits is up to what? $1,500. But you have to have a PayPal account in good standing, or if you're just opening up a new PayPal account. Okay? And again, a soft pull, they may do a soft pull. So there's no guarantee they may do a soft pull, but at the same time, you know, if they do it and you still get the $1,500, I would definitely tell you, don't just buy junk. That's what's happening. A lot of people, they're complaining because they're starting to buy stuff they can't afford in the first place. They may buy, they're buying, like if they see a Louis purse or something like that, something that's not going to actually make them money unless you like on a resale market or whatever. And so now that they're mad, like, well, this company, well, no, they didn't tell you to buy it. You are buying this knowing that you actually can't afford the payments on it or whatever. So that's one of the things that, like, the CFPB is starting to question them about. Well, why are you giving these people money to buy stuff when you know they can't afford it? But at the same time, the CFPB is like, how come you're not giving these poor people money? So it's like a contradiction. How are we supposed to help people if they we can't tell them what to buy? And if we restrict them, then it's one thing, and then if we just let them buy whatever they want at what price or whatever, that's our fault too. So it's very, very confusing to me. But the thing about it is the individual. So you're an individual. I remember back in '08, I'll give you a real good example. The housing market collapsed in '08, right? Okay. I was working with people. Now, mind you, I was making over, my household income was over $100,000 at that time. Well, now it's higher than that. But at that time, I was making over $100,000 household income. But some of the people, because I was working multiple jobs at that, so let me add that to it. But some of the people, they had 350, $400,000 mortgages, and they was only making 10, 50, $11 an hour. So now you start to understand that
these people knew that they couldn't afford it, but they still got it anyway. And that's where you kept on seeing this collapse in the housing, and you unfortunately you may see it again because you have people that can't afford expensive housing, but they're still getting it, right? So they get the house, but they can't afford the utilities. They get the utilities, but now you got to furnish the house. So now they got all of these bills, but not the income. So now you're gonna have all of this stuff. Just it's gonna be like an implosion because not only can they afford a house, plus they got a car payment. So now cars are over market value. So now, where the car companies thinking they're winning, what's going to end up happening once the implosion? Then the car companies are going to have to repossess those cars. So, like people in a better financial position, that's the reason I tell you guys is to fix your credit now, to start getting business credit and stuff. Because when cars come on the market, then where people going to have to start renting more cars and stuff, you would be able to buy those cars at a big discount and put them back on those ride share where people would be able to rent them. That's the reason like you have a lot of these big fintech companies like Zillow and stuff. They're buying these people's houses and stuff like that. The reason is because they know it's going to be an implosion where a lot of people that can't afford their mortgages, they have student loans. That's the reason they keep kicking the can down the road about student loans and stuff like that, because they know that these people don't have the income to carry these debts. So once they don't have the income to carry these debts, what's going to happen? You're going to have a collapsed economy again, right? So the only way that you're going to fix that is, guess what? You're going to have to start writing off more debts. Nope. You write off the mortgage. You're going to have to write off the student loans. All of these things from people that just couldn't afford it in the first place because they don't have the incomes to match it. But that's just me ramping on. But nonetheless, if you have any questions about business credit, personal credit, or need a consultation, click the link below.